Greetings and salutations, and thank you for visiting VRIC Media, the authoritative resource on mining and metals. We are honored to have Peter Grandich here today. His name is Daryl Thomas, and I am your host. How has today been for you? Seeing you again, Daryl, is a pleasure. In a word, no matter what, I'm pleased to chat with you because you're always on my program. I would want to begin with gathering your current commodity market forecast. A number of publications and discussions have focused on gold and other strategic metals that the United States must acquire. I was hoping to hear your take on this. What do you think? We might label it a protectionist strategy or something. First things first, I have zero business dealing with food products. The dollar and other financial metals represent the bulk of the commodities in which I am interested. As I mentioned before we started, the past 5 years have been absolutely amazing, with the exception of one rather unsightly stock. While everyone on Wall Street is caught up in the biggest bubble ever, and bubbles can go much higher than most people think, the metals are quietly trading at phenomenal levels. Nobody seems to be talking about Newmont Mining, a stock that has been the second best performer in the S&P 500. In sum, I want you to know that I've never felt more confident. When everything works out just as planned, you could feel a twinge of anxiety. When gold was $1,300, I bought a lot of it. However, I cashed out earlier this year to acquire shares in the world's leading gold producers. I immediately regretted it and began pouring money into junior resource firms. And at last they are getting their due. Because of net A, I can say that I have never felt better. B, I've been here for too long and I felt like I've gotten my hands dirty too often. When things appear to be going swimmingly, it could make you anxious. At this moment, my only argument is that the metals and mining stocks are going through correction stages. Yeah. Sure, the past several years have been anything from smooth sailing. Despite the ups and downs of the market, it seems like you remained true to your beliefs, as we discussed in our conversations. Yeah, I guess. One drawback of the internet in relation to that market is that people now speak in so many different ways, chat forums and other places, and speak often. As a result, their time horizon has shrunk dramatically. This is particularly true on the junior end and when comparing retail investors to institutional ones. Companies who don't have news every day, week, or even every few weeks don't meet their expectations for significantly faster results. Not every day has news from even the largest companies. Some individuals may have been discouraged from taking part due to their lack of long-term planning, which causes them to have unrealistic expectations. This is something I feel strongly about saying, and it's important to keep in mind in discussing junior resource stocks. The company routinely experiences failure. In 3 or 4 years, at least half of the 10 junior stocks in which I am currently invested will no longer be worth anything. And if you merely purchase them and keep them, someone will inevitably point out that you got a lot of duds from that great man. Those who do it frequently should more than compensate. And that is now behind me. On the corporate level, I have a number of companies that are already up 5 or 10 times. Therefore, I continue to believe that there is still a considerable distance to cover, aside from the inevitable corrective phase that all markets experience. By the way, Daryl, I just wanted to mention this, but I don't think we've reached a significant peak or intermediate top in the metals. We have discussed how, once I ran out of gold, I anticipated a downhill summer. However, I'd still prefer that since it would provide the groundwork for the 5,000 or 10,000 numbers that nobody, including myself, ever imagined were feasible. Those aren't outrageous numbers anymore. At the most basic level, there are several things taking place. Now that we have the technical groundwork, we can start another upswing that in the next 12 to 24 months may bring us 4,000 or 5,000. Yeah, sure, no problem. Furthermore, comprehension is critical. Therefore, the largest sums of money go to the top miners, who have the largest market caps. Big money usually goes into companies like Newmont or Agnico Eagle if they are handling other people's money as well. This is the point at which some minor miners and explorers could go bankrupt, but it is also the point at which you could extract 10 or 20 bags worth of ore out of the place. Therefore, How crucial is it that individuals comprehend this while investing in this field? That is significant. Consider the team you're collaborating with as a whole. In the early 1990s, when Jay's dad, was just getting the conferences off the ground in Vancouver, I went back in time. However, even at that era, when the price of gold was relatively low, hundreds, if not thousands, of people who would now be considered stockbrokers would attend these displays in order to build a clientele. The commission they earned was sufficient to justify their expenses. In a way, the junior resource market lost a precious commodity when commissions were eliminated and the brokerage industry essentially became extinct, dealing with clients and charging them full-service commissions. If a junior business could pique the interest of one of those brokers, they could take a sizable chunk of their book, which could range from a handful of clients to hundreds, in that fashion. There has been a significant obstacle. These newer, smaller businesses have had a hard time attracting customers through that medium. The second real development is that becoming a junior regulatory official is much more challenging in both the United States and Canada today. Even with an OTC symbol and listing, many discount brokers in the United States will not let customers buy juniors, and full-service brokerage firms will not touch them either. Another drawback was that. Next, there came the competition, which naturally constituted the third. Its rivals include the cryptocurrency market and, naturally, the stock market as a whole. Even though metal prices are 5 to 10 times larger than they were 10 or 20 years ago, it is still more difficult for a junior to obtain investment in their venture unless they can secure an exchange-traded fund or begin to truly define themselves. In addition to the usual difficulties of discovering the 1 in 100 deposits that actually become a mine, this presents a considerably greater obstacle for these young enterprises. What you mentioned initially, though, is now turning out to be an even better thing for juniors. And that is the fact that the majority of them, not just China, but the majority of the globe, are in need of more metals and minerals. But now that they've realized it, they're in a mad dash to get it before Trump's trade war, which he launched with a hefty stick rather than an olive branch, makes it seem even more necessary for some countries to have it. The junior market, then, has a great deal of good news. Daryl, remember this. I prefer not to talk too much at this point. But the fact is that this market has been undercapitalized for quite some time. Little new capital has been invested to seek out these reserves, which the world is only now becoming aware of. Just so you know, we didn't discover this today and start selling it tomorrow. It can take 10, 15, or even 20 years from the time of discovery until the first pour, depending on the length of the stick. It's remarkable to hear of the miners' perfect alignment with each other, which is why there is political unity now. Yeah, you indicated before that some people may feel this way due to the inflated markets. The man of ChatGPT, Sam Altman of OpenAI, has also voiced concerns about an AI bubble. Additionally, the market continues to surge, particularly following comments made by Jay Powell that hinted at potential interest rate cuts. Therefore, that is an area of great worry. I was wondering if you could elaborate on the 2008 correction, given gold was doing well before that. After that, it seemed like everything took a nosedive, yet gold eventually recovered and even rose higher. I mean, even if the market were to tumble, I still believe gold would keep moving up, especially in a situation like that, since we're in a bubble and the market is at an all-time high. However, you were there through it all. Do you have any comment about that? Why do you bring that up? Well, in my 41 years of commentary, I made a comment about 10 days ago that I had said only 3 times before. I started the year assuming the stock market would be somewhere around unchanged. So when I stated we're now, I really meant it. It has recovered significantly from its April lows, but it has not yet achieved double-digit gains for the year. It turned out that my prediction about superior markets outside of the US was right. Markets that do not factor in American stocks have done substantially better than the American market. The Chinese market, which is my favorite, has done far better than the American one. After said that, I think we've reached a tipping point where you need to start thinking about the possibility of a market crash or a severe correction or decline of 20% plus rather than just 5% or 10%. On top of that, I had only done it 3 times before we instituted these remedial phases. It is possible that there could be a short-term slump if there was an abrupt 20% drop, whether it happened in a matter of days, weeks, or months. This could happen, for example, with mining shares, because when people are stuck and need liquidity, they become common stocks. I am not, however, afraid of the gold price. Given the realization that this house of cards has finally begun to fall apart, I think it would come as a surprise to most that gold may even go higher than expected. Among the most crucial questions you should constantly ask yourself, Daryl, is this: hey, you folks on Wall Street always tell us when to buy, but you never tell us when to sell? This is a common gripe among conference speakers, including those at the excellent Vancouver conference and others around the world. Plus, I always knew the easy way to respond. I told them that if they couldn't buy today, that's when they should start thinking about selling. At this time, I am not even sure I can start investing in a diversified US equities portfolio that includes US stocks. High and small cap stock valuations, spreads, and everything else are all at record highs. Numerous factors point to the market being fully priced, if not overvalued. Now we can go on to the first item. While mining stocks have increased by an average of 100% or more for producers, I do not have that problem with the commodities we discuss or with mining shares. However, returning to the 2011 highs is just the beginning. Also, remember that it took inflation into account. It hasn't risen much. Plus, compared to 2011, gold's price increase is nearly $1,500 higher. Consequently, the argument that mining shares are expensive lacks merit. However, stock prices are just too high. But it's a bottle rocket in appearance. I don't use fancy words very often, Daryl, but I think anyone who has lit a bottle rocket can understand it. You insert one and then you discharge it. Occasionally, one would go far farther than we had anticipated, nearly like a Roman candle. We were aware, though, that it popped and returned. It will unfold in this way. At this point, all that remains is to determine the level and the reason. I also don't think it will have any significant impact on the metals market for more than a brief moment. Whatever was going on with the metals would have ended before you could even blink. In this line of work, timing is crucial. Commodity prices have been rising sharply recently. The price of copper, which began a sharp ascent. Despite what the junior sector and copper businesses would have you believe, we are actually quite close to our all-time highs. However, I believe it will see a significant upward correction in the coming year or two. There will be a flood of capital flowing into the industries as well. Along with Wiesler Silver and ISO Energy, we are the Wiesler Copper team that gave you success. Visit our website at wieslercopper.com for additional information. Oh, absolutely. Given the ups and downs of the market during the past few years, it appears as though a huge market movement, particularly a bearish one, is just one news headline away. Because I am old and could easily forget this in 2 minutes, allow me to interject. You said it on Friday during the huge move when it appeared like the Fed was giving in and all that, and the metals did really well. I think we'll be talking about it in the future months, and you'll undoubtedly be with others. We did, however, return a portion of it. The financial services business and the financial media are shackled to the "don't worry, be happy" bunch, as I've dubbed them. If they think they're wrong, they'll never stand up to them. However, the current thinking states that Trump's takeover of the Fed is the reason this can continue and even increase. Interest rates will be lowered to 0 once he installs people there. To start, they won't be able to overnight bring interest rates down to 0. It's going to take time. However, the item to examine is this. To begin with, the long bond rose 100 basis points when the Federal Reserve last reduced interest rates.